Imagine waking up at like 3 a.m. on a Sunday, checking your phone, and realizing your portfolio just swung, 15% while the rest of the financial world was just fast asleep.
Oh, yeah. That is a brutal way to wake up.
Right. But that is the reality of trading crypto CFDs. So today, we are stacking them up against the ultimate traditional heavyweight, which is Forex.
A very different beast.
Totally. And we aren't here to crown a better market. The mission today is figuring out which of these environments actually matches your pace, your risk tolerance, and your specific trading setup. So, okay, let's unpack this.
Well, to figure out where you fit, we first need to define how these two markets basically behave in the wild. We have to look under the hood, specifically when you introduce CFDs, contracts for difference.
Right, because you aren't actually dealing with the asset itself.
Exactly. You're just trading the price movement.
Yeah.
And Forex, like the euro to US dollar pair, that is driven heavily by macroeconomic catalysts.
So we're talking like interest rates, inflation data.
Yeah, and whatever the central banks are doing. But crypto CFDs, conversely, they offer this leveraged price exposure to digital assets without the hassle of, wallet management or on-chain logistics. But they are heavily driven by sentiment.
And narrative, right. It feels like trading Forex is basically like sailing a ferry on a scheduled route that's dictated by the economic calendar.
Yeah.
You know where you are going.
Like that.
Thanks. Yeah. Whereas trading crypto CFDs, that is like hopping on a sentiment-fueled jet ski that can just abruptly change direction without any warning.
That is spot on. And what's fascinating here is that Forex price action really tends to respect established technical levels.
Because of the deeper liquidity.
Exactly. It has massive liquidity.
Yeah.
Whereas crypto CFDs, they're just incredibly prone to these sharp, noisy percentage swings.
Which brings us to the timing, right?
Yeah.
Because these markets move so differently, they operate on entirely different clocks.
Oh, totally different rhythms, which directly impacts how you must manage your risk. Forex operates 24 hours a day, but only during the business week.
Right.
So it rotates predictably through the Asian, London, and New York sessions. But crypto CFDs, they never sleep.
The weekend breakouts.
Exactly. Breakouts happen all weekend long.
But wait, let me push back on that for a second. Doesn't 24/7 market access just become like a trap for overtrading and fatigue rather than a real advantage?
Oh, absolutely. It is a massive trap if you aren't careful, because leverage amplifies both opportunity and loss. The high volatility of crypto means a really small entry can instantly become stressful.
It just swings against you while you're getting a coffee.
Exactly. Position sizing is absolutely critical here. It is not just the 24/7 schedule. It is about market depth. In Forex, your stop losses are usually respected.
Because the pool is deep.
Right. But in weekend crypto CFDs, liquidity thins out significantly. You are hunting momentum in a very shallow pool, and that is exactly when slippage can just destroy a highly leveraged account.
Wow. Okay. So what does this all mean for you listening right now? How does this dictate your actual strategy?
Well, it dictates where you should deploy your specific skill set, right? Forex is really the ideal starting point for building consistency.
Because it's a bit more predictable.
Yeah, you can practice your execution with tighter spreads or trade the session breakouts. Crypto CFDs, though, those are for momentum-heavy traders.
People who want those massive price expansions.
Exactly. And people who already know how to manage that kind of extreme exposure. If we connect this to the bigger picture, there is no universal winner here.
Right.
Your true edge just comes from being ready for the setup that actually fits your life and your routine.
Which makes total sense. And that leaves me with a final provocative thought for you to chew on today. If your trading success is dictated less by the asset itself and more by your personal schedule and really your emotional resilience,
Which is huge.
what hidden psychological biases are secretly driving your financial decisions right now? Are you patiently riding the ferry, or are you just chasing the thrill of the jet ski? Think about it.